Hello everyone. The purpose of this video is to gain a deeper understanding of financial statements. Specifically, we will be taking a closer look at the income statement, the balance sheet, and the statement of cash flows, and getting you to really understand what is the intuition behind these statements. You should have this file already open. If not, directions on where to get it are in the comments to this video. It has several tabs. This tab, financial statement example, has, the actual income statement, balance sheet, and statement of cash flows for an example. Another important tab is going to be pro forma. We will be building something similar to this with a breakdown of the income statement and the balance sheet. So if you get lost during the video, you can always click into here. And finally, this financial statements tab. It gives you a very colorful income statement with an example, a very colorful balance sheet with accounts designed, and the statement of cash flows. So let's get started. You should be on this financial statements tab. Important, you need to follow me along this video because the purpose is for you to write everything down to learn it. So you're going to create a blank tab by clicking here at the right bottom corner at the plus button or insert new tab. And we're going to zoom in here a little bit because this is pretty zoomed out. So I'm going to zoom in here at the bottom right corner by pushing down the plus sign or view, and you can zoom in here. I'm going to switch the font to Times New Roman because I prefer it, but it's up to you. We will take a look at three main financial statements. The first financial statement, and perhaps this is the most important one, is the income statement. And I invite you to follow along and type everything along with me because, again, the point is for you to write it and to learn it and to memorize the very basic statements. You can also write it out on paper at home. Remember, with these videos, you can rewatch them, rewind them, and pause them whenever you need it. So let's get started. We're starting out with the income statement, and the income statement is perhaps, the most important statement. It shows you how everything flows through the business. We call it IAS, and it is a period-specific statement. So if, for example, something happened in 2023, it's going to be reflected on the income statement for 2023. The income statement is very simple, and if you were to start a business, let's say you're selling jackets or shirts, you would think about recording your business revenues as expenses exactly in this way. So you start out with sales. They're also known as revenues. Multiple things are called, multiple names are used for the same thing, often in accounting and finance. And really at the base of it is just the quantity of the shirts that you sell, let's say 100, times the price, $10. So $1,000 in sales. And to make the shirts, you had to spend some money on it, right, to buy the material. So from your sales, you subtract the costs. And there's many different costs, we'll cover them. And really that gives you your profit line, or we call it net income, also known as earnings. And this is your basic income statement. This is the biggest sub-summary there. So I'm going to create this line here under the border. I'm going to do a top border so that we know this is our main sub-summary. What is an income statement? Sales, money that you get from selling your shirts, minus the costs that went into making those shirts. And the total at the end is net income. Out of that, you pay a dividend to shareholders. And what is left over is reinvested back into the company, and it's called retained earnings. So it is the net income or the earnings that a company retains and reinvests back into the business. Basic income statement. Moving on to the next basic statement, we're going to take a look at the balance sheet. The balance sheet is, we'll say is BS, is different from the income statement in that it is cumulative. So it tells you what sits in an account from forever ago till now. So if you see inventory for 2023 at 100,000, this is not the inventory for 2023. It's what sits in your inventory account from forever ago till 2023. To know what happened to the inventory in 2023, in this cumulative statement, you need to difference the accounts on the balance sheet. So you need to take your 2023 inventory and subtract out 2022 inventory. That way you know what happened to inventory in 2023. Another important thing about the balance sheet is that it appears at book value. We'll just leave this information here. The balance sheet has two important parts to it: assets and these are the groupings, and liabilities and shareholders' equity. And let's go ahead and make these kind of like as headings. So let's bold them and let's move them to the middle of the cell. So I'm going to center them in the cell. The two most important categories of assets are current assets, and these are things like cash and inventories and accounts receivable or credit to your customers. Non-current assets or long-term assets are referred to as property, plant, and equipment. These are the sewing machines that you have to make your shirts and the factories there. This is also represented usually in the form of net fixed assets. These current assets and these long-term assets give you your total assets. And this is the main summary on your balance sheet. So I'm going to create this top line above it as well. All of the firm's assets, the current assets and its long-term assets, are financed with two sources of financing. This kind of gives it away. It's either going to be financed with debt, which we also call liabilities and also call leverage. These are all the same names for debt or borrowing, or equity, bringing in new owners. So all of your assets, all of your firm's assets are financed with two sources, debt and equity. And this is going to be liabilities plus shareholders' equity, the sub-summary of what finances your total assets. This brings us to an important identity that's called the balance sheet identity. So I'm going to perhaps, just make it colorful. This balance sheet identity is that your total assets should equal your liabilities plus shareholders' equity. And it makes sense because your assets are financed with debt and equity. This is your balance sheet identity. You can reshuffle it and rewrite it in multiple ways, such as current assets plus net fixed assets equals various debt accounts plus equity accounts. But this balance sheet identity always holds. So we've covered the second important financial statement. And finally, we're going to cover the last one. That last statement is called the statement of cash flows. The statement of cash flows is really derived from both the income statement and the balance sheet. So if you are given a choice to select only 2 out of 3 statements, you take the income statement and the balance sheet because you will make the statement of cash flows from the information on the income statement and the balance sheet. Statement of cash flows, just like the income statement, is period specific, and interestingly, it explains one single account from the balance sheet. That account is kind of a giveaway in its name, statement of cash flows. It explains the cash account from the balance sheet. And it splits up the change in cash from the balance sheet into 3 subparts. Operating cash flows, we'll call them O, investment cash flows, and financing cash flows. And together you can total it up into your total cash flow of operating plus investment plus financing cash flow. And one way to always double check your work is that this should always equal the change or the difference, D for difference, in cash from the balance sheet, because this whole statement explains cash on the balance sheet. I'm going to again create a bit of a summary for it, sub-summary here. Okay, we are now done. You have your basic income statement, sales minus cost, your basic balance sheet that's cumulative, that has assets that are financed with debt and equity, and the statement of cash flow, which explains cash through operating, investment, and financing activities. You can take a look at these examples and see a much bigger income statement, balance sheet, and statement of cash flows with more real-life stuff. These are your basics. You want to remember them. We're coming in the next video to create a bigger breakdown for income statements and the balance sheets. But before we do, let's rename this tab as My Financial Statements. You are creating it yourself. And go ahead and save this file wherever you're saving the files you're working on. See you next video.